The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the United States, whether they be insurance agents, attorneys, CPAs, mortgage brokers, banks. Lots of different professionals come to us for advice for insurance needs, life insurance, annuities, disability, long-term care, where we have our expertise. And we can help you with your situation in any type of insurance question you may have, or if you need a CPA, you need an attorney, you want to build your team and have them all working together, and we can help build that team if you don't have one. So we have a vast network of people that we work with and can help you with any financial matter that you have, and are happy to do so. We enjoy doing that. So today I want to talk about something very unique, and I call it loan rescue strategies. And it's funny because even the best insurance agencies out there and agents don't know about this and don't know what you can and can't do. For instance, where we find a lot of loan rescue strategies is when people have loans on their old policies, such as Guardian, New York Life. Usually it's whole life policies where we have the biggest issue because they've grown a lot and they have a lot of cash value, but they have these existing loans and people were told they didn't have to pay the loan back, or they stopped paying and the loan keeps increasing, and you can have a humongous problem if you don't rescue that loan. So if you have an old whole life policy and it has loans on it, or maybe your parent does or your grandparent does, and they've had this policy for a number of years, and either they stopped paying on it or they borrowed against it to buy a house or do something else and left that loan on it. Well, that loan is compounding every year, and even though you're not required to pay on it necessarily, as long as there's enough cash to hold the life insurance policy, what happens is two things. One, that loan will come off if that person dies, where they'll pay out the death benefit less the loan. But two, if that policy runs out of cash or they don't pay the loan, and what happens is that policy may lapse or collapse. And what most people don't realize is that not only does it collapse and you not have insurance anymore, but all those dividends you made for all those that whole life company paid you for all those years now become taxable to you as ordinary income. So there's a lot of people that wake up and say, "Oh, we have a tax of $100,000, $200,000, $50,000 that we didn't know about because we let our policy lapse." There's a big problem. So there are strategies, and if you are a life insurance producer and you've worked with a whole life company for a number of years and you have a lot of whole life policies. I know there's a Guardian agent that I work with who had about 30, he has hundreds of policies of people, And he never realized that these loans that they have can actually be rescued. And there's really three main strategies for rescuing these policies. First off, what many people don't know is that loan rate on a lot of these policies can be either a variable rate or a fixed rate, just like a mortgage. And people don't know that. And now that we've had interest rates rise, that a lot of the variable rates are at stupid high rates right now because we have a variable rate and the loan rates are so high right now. If you have a fixed rate, even the fixed rates, especially if it's an older whole life policy, could be as high as 8%. I've seen 8% all over the place, and when rates were at 3%, that's a ridiculously high rate. Why are the rates so high at 8%? Locked in because when they got the policies, they were paying dividends of 8 and 9%. So they put in the contracts an 8% loan rate, and people don't know it. So there's a lot of people, you really have to look at these old whole life policies and look at them very closely, especially as you get older. You 50s, 60s, 70s, 80s, we're seeing people with large loans. Now, how do we rescue them? Well, if you're young and healthy enough, we can make an exchange with a company that has a universal life policy or an index universal life policy or even a variable universal life policy, which may have much lower loan rates than the whole life has. And with that, it may have a lower cost of insurance and a lower loan rate, and the loan can be kind of paid off at some point on a much easier basis. With a lower loan rate and maybe some good performance, you can pay that loan off. You can also use any excess dividends to pay down the loan. And many whole life contracts have an option of whether the dividends are paying towards more insurance every year or they're paying down the loan or paying you a check. And many people don't do that. And also the rates can be looked at. And those two things need to be looked at and analyzed. And some people have multiple policies that are coming to us lately that we have to look at every single policy and see what's the exposure, what's the liability, what's the growth rate. Is this policy going to be there when we need it? Is this policy performing what we want it to perform? So that's really one strategy, is to convert it into something else. Another strategy is to renegotiate that loan with a bank. Some banks have more favorable rates than the loan rate of the policy. You don't need to prove your net worth or anything else. They actually use the policy as collateral, much like a house would. So there's no loan applications or anything else. They don't look at your credit. They just look at that loan and see if it's payable at a better rate, and you still can keep your policy. And then a final way that we can do this, that we're seeing a lot of, is we're seeing some much older people that have these old whole life policies that haven't looked at them for a while with big loans on them. And one of the things we can do is actually do what we call a life settlement on these and pay those loans off. And what is a life settlement? Well, you may be listening on the TV or seeing these ads for, if you have an old term policy or this and that, you've got money in your basement and you don't even realize it. And that's a life settlement, okay? What they're doing is you have a third party that actually buys your policy from you. They may even buy it with a loan on it and rescue you, buy you out of your policy, and may give you like a lot of money. And if you can't afford to pay for your policy anymore, this might be a great idea, or maybe you don't need it anymore because your beneficiaries have passed, or for whatever reason, you bought it while your kids were younger, and now, you bought it for your wife. Maybe your wife had passed, or your husband. So this could be a great option for you, is to what they call do a life settlement. Now, you're hearing stuff on TV about this all the time, especially if you're in my age group and the stations target the ads to, you can sell your term policy, sell this. You don't want to go with the people advertising on TV, and I'll tell you why. You lose all your negotiating powers. If you go to one company that's on TV, they're going to ream you. They're going to pay you the least amount and say, oh, yeah, we can give you this for it. Or nothing. You're not going to get the best offer. You're going to get the best offer when you call us, and we can shop it for you with multiple companies that are in that space that can give you a great offer for that old policy that you have. Now, the policies have to be over $100,000 before they'll look at it, but this could be a great loan rescue strategy, or a strategy if you really don't need the coverage anymore, but you'd like to get some big cash, and we're seeing some big ones coming in of people that are actually settling their policies. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. I can be reached by calling 631-647-4694. You can always visit me on the web at themainstreetcode.com. And if you happen to miss one of my broadcasts, catch me on Apple or Spotify at the Main Street Code, or even the Long Island News radio app for past episodes. Thank you. We'll be right back after commercial. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and prior to the break, we were talking, by the way, if you need to reach me, 631-647-4694. I encourage your calls. We've been getting a lot of calls on a lot of different subjects, and we're involved in a lot of different areas regarding insurance, and we're getting calls from attorneys and accountants all day long with different things. So before the break, I was talking about loan rescue strategies, and particularly I started talking about life settlements. Life settlement is when a third party buys your policy. And like I said, you don't want to go to the people that are on TV, because they're not going to give you the best offer. They're going to give you a blank offer based on your age, based on what the policy looks like. They're not going to get into the weeds. And what do I mean get into the weeds? Well, the more valuable your policy is, more valuable to a third party if your health's not so good. So if your health is not good, it's more valuable to a third party to buy the policy, because then they'll get their benefit. And of course, they're looking at your policy, unlike I would look at a policy, as an investment. So they're going to bet on you dying at a certain point, and the earlier they think that your potential of dying is, the more value they're going to place on that policy, or the older you are, and in combination of some health things. And this could be a saving grace for so many people. This is an asset that people don't realize. They have these life insurance policies, and they think, oh, I just can't afford it anymore, and they give them up. Don't give them up. Just ask us first. Even if it's a term policy that's, it's going to expire in a year or two. I don't need it anymore. I bought this term policy, but you know what? I've got cancer now. I've got an issue now, or I'm 65, 66, 70. What do I do with this policy? Maybe I need to replace it with a permanent policy because I want the coverage, or maybe I just want to sell it and be done with it and get the cash and use it for my well-being, for my long-term care, for other purposes, for other needs that I have. This is why people sell policies. I just had lunch with a rep of mine who we actually did a settlement for a policy of a gentleman that was in his 50s, and he had sold him a policy. It was $1 million policy, and he bought the term. He was healthy as a horse, and he had 3 types of cancers about 5 years ago. And they really didn't think he was going to do well. And he had 3 kids ready to start college, and a house, and a wife. And he was the main breadwinner. And we sold his policy, and those kids got to college, and he only invested maybe $5,000 or $10,000 in his policy, and he got several $100,000 for it. And his kids got to go to college, and so his insurance policy was worth a lot. Now, that's a very rare case. Most of these insurance policies are looking for people that are much older, but if people are very sick, there's some very value in there in term. But you want to come to us, not call the TV, because we are going to shop it for you. And we're also going to position your medicals in the best way possible to get you the best offers, just like we would if you were to buy a life insurance policy and look at your health and analyze why you want to come to us for life insurance. Is because we are going to get you in the best possible position, even if you have ailments, even if you have diabetes or you're overweight or a combination or you have a heart issue. We have insurance companies that will look at that, and they look at it favorably when we position you properly and we talk about your health and what you're doing about it and how you know, all these online applications and ordering, on the internet, they don't get into the wheat. They don't talk about your health. They don't talk about, okay, I have high blood pressure, but I go to the doctor and I'm taking medicine for it. Okay, then that's a good thing. A lot of diabetics, and we have a huge population of diabetics, especially lifelong diabetics, have a better health profile than many other people because they're diligent. They're more diligent about their health and their sugars and everything else because they have this ailment. And an underwriter that's explained this, and when you can back it up with verifiable height, weight, and other factors, they'll actually give you credits for being a good health risk for the insurance company, which will in turn give you lower prices or offers where you're not going to get them from dialing 1-800 buy life insurance or going online and buying from anybody. You really want to work with us as advanced underwriters that can help you get the best possible coverage you can get. And we have many, 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 many success stories. And that's why agents come to us all the time with different scenarios and different health scenarios, as well as what's the best carrier, what's the best price, what's the best convertibility factors for that life policy. So, wanted to talk about that. One other thing that has crossed my mind, and you need to know this, and we've gotten many calls for this and different things. We have people that we call them orphan policy holders. People have bought policies well in the past, and they put them in their drawer and they forget about them. Some of them are life insurance, some of them are annuities, and you call them on the phone and say, hey, by the way, I noticed something, and people don't pick up the phone. They don't get their email, and things get lost in the sauce. They get lost. People move. They don't tell the insurance company. I understand. They move on. They change your phone number, and you may have bought a policy and not even remembered. So we found like 50 annuity contracts that we had, and we sent everybody a letter saying, hey, by the way, a lot of these annuity contracts, they're sitting at 1%. People forgot about them. A lot of money. And we got a call back from one of our letters just 2 days ago that this client called us and said, that actually wasn't the client, it was the client's son. Said, my father passed 3 years ago, and I see that you sent me a letter, and by the way, this annuity had $175,000 in it. And he wanted to know if he was the beneficiary of that annuity. And I can't make this stuff up. He'd been dead since 2019. The insurance company had no idea. Of course, the gentleman who took out the contract never told anybody about it. So they found out from us. And we were able to get this gentleman $175,000. And he was in his 60s. His father was in his 80s, and we've saved his financial future by just him calling us and just by him saying, oh, didn't even know this existed. And wow, look at that. We found $175,000. Could that change your life today? If somebody handed you a check for $175,000, by the way, tax-free? I mean, here's $175,000. Whoa, where'd that come from? Whoa. That's life-changing. Life-changing. But people don't know. They put things in a drawer. So if you're working with a parent or someone who now has dementia or Alzheimer's, one of the things that you want to do is get really organized. Help them get organized. Let us help you get organized. That's the O in the code. Choice, organization, direction. You get organized, you'll find out where things are. You'll see how things are titled. We can go over that with you and keep you together so that all of a sudden, boy, I could have used that 175,000 hours 5 years ago. Didn't know about it. Guess what? We found it. So I feel good we found that and we helped somebody, but people don't respond to our letters. People don't respond to our phone calls. We're in a new age. And I understand why you're not picking up the phone and listening to anybody. It's hard to trust people. But you know what? Getting organized is key. Having your insurance organized and your family members. Make sure your beneficiaries are right. The product is right. These are all big things. You've been listening to the Main Street Code for Financial Success. I really hope today was helpful to you. We're out to help people. And please, any situation you have, you're looking to buy insurance or you have insurance, you will need somebody to go over to us, give us a call. 631-647-4694 or visit us at themainstreetcode.com. Thanks for listening, everybody, and have a terrific weekend.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.